What do I mean by money made? I mean money made. We talking about money. That's what we doing in May of 2025. So we are super, super excited to present our webinar today on entrepreneurship through acquisition. I gotta pull up my notes because I'm gonna be going quick. I'm here for a short time, not a long time. And I have a partner that's going to be joining me later on. And so, welcome. Happy Hump Day, y'all. Happy Hump Day. Happy May. Thank you for joining us today. We are super, super excited. So, let's get the party started. I'm just going to share my screen over here. And let me just make sure I'm doing this right. All right, let's see if I can make sure. Give me a second, y'all. I would like to share screen up in here, up in here. And let's see. Oh, I guess I got to share my entire screen. Y'all all up in my screen. But let me just make sure. Okay, cool. All right, so if I full screen this, then that thing goes away, right? All right, cool. So welcome to Entrepreneurship Through Acquisition, ETA. What is it and where can you get the money? Real quick, in the chat, like Daryl said, we want some engagement. So put in the chat a 1 if you are thinking about entrepreneurship. You have not started anything, you have ideas, but maybe you are still like W-2 or you're still in your career, right? No business yet. Number 2, put a 2 in the chat if you are self-employed. Think real estate agent and barber, meaning how much active time you put in it, you're going to get paid as long as people close or get in the chair, right? Does that make sense? So you're like 1099. You may work on a team, but your effort is still right. And then put a 3 in the chat if I like this. Oh, okay, we got a 3. I ain't even go over 3 yet, and Marky is like, I got 3. So 3 if you own a business that employs people. Put a 3 in the chat if you own a business that employs people. Think W-2s and subcontractors that you pay out. And because I have been in the MLM world, I do not mean building a team. That's different. And that's going to come back, and I'm going to explain what I mean by that a little bit later. Oh, this is cool. Jen Wilson from Pennsylvania, and you're moving to Georgia in a couple months. And you already know about the Atlanta Black Chamber? You are ahead of the game. Thank you for joining us today, Jen. We appreciate you for joining all the way from PA. That's what's up. So 1 in the chat if you're thinking about entrepreneurship, 2 in the chat if you're self-employed, meaning your time is still generating that money. And number 3, if you own a business that employs people where you don't necessarily have to be there, and you hire people and you pay them out. All right. So who am I? What have I realized about business? My businesses specifically, and I'm talking about me, y'all, my businesses, and how I learned about ETA, Entrepreneurship Through Acquisition. So who am I? Not your typical financial advisor. And what I mean by that is I am, and I'm just going to make sure I say this the right way, right? And this is not a tagline, a phrase that I use, right? Like just willy-nilly. I am a holistic financial advisor. What does that mean? I talk about the 4 things that build wealth with my clients, which are entrepreneurship, life insurance, investments, and real estate. Everything that builds wealth is under one of those things. That's what I talk about. And so when I review my client's entire financial house, we're looking at how entrepreneurship, life insurance, investments, and real estate can play a part in building the most solid financial house that you can build, right? So I am not just your hype man in the financial world, right? I'm not just your hype man. I'm not one of the social media gurus that's just going to get you excited, but I also help you implement your ideas and implement your plans, right, for your financial life. As a certified family office wealth advisor, right, I work with CPAs. I work with estate attorneys like Anitra Walker and tax planners and tax strategists. And on the other side, we work with lenders and realtors and business brokers like Carl, who just had a webinar about this particular topic a couple of days ago, who's also the chair of the North Metro, and business bankers. And what I realized about the businesses that I own, I operate, right? As a financial planner, yes, insurance premiums generate residual income. So does assets under management, AUM. And I'm a fully licensed financial advisor, SIE 67, 63, 65. I'm out here. And a fully licensed life, health, disability insurance in a bunch of states, right? So those products do generate residual income. However, to get 30, 40, 50, $60,000 a month from that, it's going to be a little more difficult, right? As a speaker, I love showing up, talking, killing it, and leaving, right? And getting paid and leaving. But the thing is, I still got to show up. Does that make sense? I'm not looking at the chat because I'm going to focus, but I hope that makes sense, right? As a speaker, I still got to show up. As an author, I will keep getting paid on the books that I sell as long as I keep reminding people that I'm an author and I have 4 books for sale, right? And so buying a business that generates 20, 30, 40, 50, $60,000 a month without any of my inputs is just simply a much faster path to financial freedom, whatever that looks like for you. I know what that looks like for me. And so how I learned about ETA was through a gentleman named Jonathan J in the UK that I didn't mean for that to rhyme, but it did, right? And his mindset, Jonathan J from the UK, his mindset is one, you never use your own money to acquire already existing profitable businesses. You never use your own money. Doesn't mean there's not money involved. That doesn't mean that the seller of the business is not getting what they want. It just means that necessarily there's ways to finance it in a way where you don't got to pay cash, right? All for the whole amount, right? Let's say. Number 2, his mindset is you never buy a distressed business, maybe distressed sellers, like I'm retiring, I just want to go be a grandparent, things like that. And you never buy a distressed business unless you know, one, why it's distressed, and number 2, how to fix it. Even if you do that, it shouldn't be your first one, right? And number 3, his mindset is you never buy a franchise. He has his mindset on that. I believe there are some great franchises out there. Just understand that if you are the type of person that wants to make decisions like that in terms of products and services you can offer to your clients and customers, necessarily having a franchise who you have to now check with someone else, right? Not necessarily a fast way to do that. So, what is ETA about? It's about systems. Dots mean acronyms. So, systems. Saving you stress, time, energy, and money. And the little S's there, if you want to add like the stupid, you know how it's like KISS, keep it simple, stupid, or silly, or whatever. Like it could be an acronym, small s, systems. Saving you stress, time, energy, and money, right? That is what entrepreneurship through acquisition is about. And we'll get to this, but most people just consider starting something brand new, and you don't have to do that. Honestly, y'all, this is the disclaimer. This is Chike, Got Wealth Guy, not necessarily Chike Money Team Chair. I think starting a business from scratch, no customers, no revenue, no marketing, no CRMs, no payroll, no contracts, from scratch, starting a business from scratch in 2025 is probably one of the riskiest things you're going to do besides walking out the house without ID as a Black man. That's just my opinion. That's Chike talking. Y'all know me. Some of y'all don't. Welcome to me. Right? And so you don't got to start from scratch. Right? And so there's 3 P's that we talk about: purpose, process, and people. Your purpose is your why. So I have a wonderful family I work with, and the wife is has her career in a financial company, but not necessarily doing financial stuff. He was working at a contracting company, and suddenly he was told that the company was being acquired by someone else. He would not have a job come like March of this year. It actually ended up being January of this year, so sooner than they said. And so, because we talked and her income was sufficient enough to take care of the household stuff, we talked about, okay, how can you add revenue in a way that's going to make you like happy? And so we discussed buying a business. We started out talking about laundromats. They went and visited a few, wasn't their thing. They ended up buying a vending machine route, buying new vending machines, and having a person go find the places to install and place those vending machines, right? And I share that because you got to know your why. And so there's 3 kind of potential purposes for this business acquisition stuff, right? One can be lifestyle, where you are starting a business or you're buying a business just so it can pay for your bills, just maybe time freedom, right? Maybe to use your skills that you have without building from the ground up. That's like lifestyle. Then there's leverage. And so I'm going to be using some terms in the ETA world that we're going to need to learn if we're going to do this thing. Roll up. A roll up is when you purchase a bunch of small businesses. They could be the same or they can be complementary businesses, and you roll them up to create a bigger company that you can sell for a higher multiple of either the revenue or the net profit to someone else, another person or private equity. That's like leverage. It's like flipping a house. You buy the house, and I know, we got folks in the real estate professional services committee that can help you with this, right? You buy a house, you fix it up, you kind of add stuff to it, and you sell it for more money to someone else. People do that with businesses, right? That's leverage. Or legacy. Legacy is like long-term strategic building and growing of either one or multiple businesses that are more than paying for your lifestyle, that you don't want to flip it to someone else. You're not intending to sell it. It is like a family thing. This is going to be in the family. Someone, that's like a legacy piece, right? And so what's your why? Right? I'm gonna go to the chat because I actually want to see what people are typing real quick. All right, so what is your why? Anyone, what's your why? What is your why? Anyone, what is your why for buying a business, not starting, buying? What's your why for buying a business? All right, so I'm gonna let you go ahead. Yup. So Will, leverage and lifestyle. Okay. Don, can you share Proverbs 13:20? I don't have that on my list. My why is intertwined with God's purpose and I need money. Yes, I love it. We got another Melvin on here. Generational wealth, ownership and wealth, leverage. Yes. Yes. Jen is like, okay, yeah, I want to help people too, but I need money. Okay, cool. My children, I don't ever want to be broke again. Yes, I love it. Once we know our why, then we can proceed with the process, right? And here's the process. It's kind of lengthy. I want to sit at a clear beach. Larisha, I'm with you on the beach. I love a beach with the water that you can see through. Like not like New York's, not like New York water, like beach water. I'm with that. All right, let me go back to my notes because I'll get sidetracked talking to y'all. All right. The process. So the first part of the process is you're establishing your search criteria, aka your deal box, right? You got to make it easy to say yes and no to the thousands, maybe hundreds, maybe tens of hundreds, maybe thousands of businesses that are going to find, because there are millions out there. And depending on your deal box, your search criteria, you're going to find a bunch, whether it's a state, whether it's an industry, right? Whether it is whatever your deal box is, it's going to help you say yes or no quickly, because you have to be able to say yes or no quickly, right? You walk in a house, most people at home, you walk in a house, is something don't smell right, oh, we out quick, right? So you have to figure out your financial and business criteria, cash flow. Here are some terms to know. SDE. SDE is seller discretionary earnings, which is the same as EBITDA. 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 Earnings before interest, taxes, depreciation, amortization. EBITDA. EBITDA. Earnings before interest, taxes, depreciation, amortization, right? Which is the same as net profit. Depending on who you're talking to, they're going to say SDE is this, the cash flow is this, the EBITDA is this, right? So these are the same things, right? So like for example, for us, the minimum is $4,000 a month for any business that we're gonna buy. My much smarter wife and I, any business we're gonna buy, minimum has to generate to us without our input at least a minimum of $4,000 a month. Um, that's us. So what is your number? Um, Expertise, right? With your search criteria, your expertise. What do you know? Know. You know, when Black people say something twice, we mean it, right? And so, what do you know? Know. Like, I know cars. Believe it or not, if you ever get in a conversation about cars, you'll see the passion. I know cars, right? So that's part of my deal box, right? Um, what do you have some knowledge about? What do you know about, or what can you add value to? That's like the next level, right? So maybe you know construction, but you're not an expert, right? But you know about construction. Maybe there's a business that you can purchase that you can add value to with your knowledge. And the other part is your passion. What do you love? And if you ever heard me speak to the youth, I always say passion is not enough. It also has to be something you're good at and people need. In terms of buying a business, if you really love something and someone has a business that is successful, profitable, cash flowing, and they're doing what you love, I believe that's something you could add value to. So that may or may not be part of your search criteria, your deal box, right? Next part of this process is we're searching and selecting. Now, there are websites that you can go to. Even Carl Barham works with Transworld, right? They are more local, I would say. They're in different states, but here in Georgia. There is Biz Buy Sell, BIZBUYSELL, BIZBUYSELL, bizbuysell.com. And there is LoopNet, LoopNet.com. LoopNet for my commercial real estate folks like brother Joseph Harlan and ABC member of the year on here. LoopNet is not just for looking for commercial real estate. LoopNet is for businesses too. When you go to LoopNet.com, just on the top it says search for businesses right next to real estate. Most people just miss it, right? And then we're going to start selecting things that fit our what? Our deal box. How do we select them? Online, you literally just fill out your name, phone, email, and you hit submit. You will then get a link to either a paper or DocuSign NDA, non-disclosure agreement, saying that if you are going to now receive information about this business for sale, you cannot talk to people about it without our consent, especially the employees of that business. You can mess everything up, right? You're going to sign those NDAs. And once you get that, you're going to get a bunch of information. It might be called an offering memorandum. It might be called a CIM, a confidential information memorandum. It could be called, you might get linked to a deal room, right? A deal room is where they upload documents, almost like a Dropbox online. Then you start doing your due diligence, reviewing the information, right? Um, and we don't, I know we don't have enough time because again, I got to share this time with my brother Brian. And so you want to be able to review the numbers quickly. All right. So then you got to do the research, right? More research, running numbers, projection scenarios. If we grow by this, we'll make this. If expenses get lessened by this, we'll have more here, right? Then you have conversations with the sellers, right? And their business brokers, right? And then you're making offers with what they call a letter of intent. Letter of intent is only sent to the broker or the owner of the seller of that business once you've realized that the deal meets your deal box, right? You done the research, meaning you've reviewed the information. That information could include balance sheets, profit and loss statements, tax returns, um, business plans, all types of stuff, right? And then you finance it and you close. So there are different ways to finance a deal, right? There is cash, there is seller financing, there is government-backed SBA loans, 7A, 504, 504 Green. If you don't know about the 504 Green program, check it out. You heard it here first. And there are sale leasebacks. What I mean by a sale leaseback is where, let's say the business owns the real estate. Let's say the business is worth 500,000 and the real estate is worth $1 million, but let's say you can sell that building for maybe 1.5 million. You could, in essence, go under contract to buy the real estate for $1 million, go under contract to buy the business for 500,000, assign the contract for the real estate to a buyer who's going to buy it for 1.5 million, take that cash, give it to the seller for the business and the real estate. You now own the real estate. You now own the business, and now you become a tenant to the buyer that gave you the 1.5 million. That's another way. So there's a few ways to finance a deal. I just want you to like hold this in your heart. You don't necessarily need money to do this. All right, next, the people you need to do this. God. Listen, this is not easy. It's not for the faint of heart. You will need prayer and faith and work. So, God, your significant other, your spouse, or whoever you answer to, people who have bought businesses before, your CPA or tax advisor, a legal advisor or an attorney, a CFO, right? Like a fractional CFO, like Arnisha, right? Who's going to help you with quality of earnings reports and to analyze that info, that financial information. A financial advisor like Chike, a business advisor or mentor, right? Who's gonna, you can like, hey, what do you think about this, right? A franchise or business broker that can look out for deals for you on your behalf, knowing your deal box. And you want to maybe get a lending broker that's going to be able to get different banks and lending institutions to vie for your business based on the deal structure you want to put together. All right, well, what else? That's it. So to summarize, I would love for you all to book a call with me to talk about this or your financial advising needs, your financial house review. Let's see if ETA is something that adds value to your financial house. We'll go through the floors of your financial house from the foundation to the roof, see where your house is strong and where it's weak. Matthew 7:24 says that the storms will come. And if your financial house is built on rock, you good. If it's built on sand, why not? So as an advisor, that's what I help my clients do, build their financial house on rock So I want you to book a call with me. That's the QR code. And lastly, Q&A and share your aha moments. So either you have a question, I'm now going through the chat. If you have a question about this, thank you, Joseph. BizQuest in the chat. BizQuest is another great resource. Thank you, Joseph. Brian, you ready, man? I got you. We're gonna do Q&A. We're gonna do Q&A. Joseph coming with the gems. Businesses for sale listings through the Georgia Association of Business Brokers, GAB. Shoot, write this down. Shoot, I'm not just teaching, I'm learning. GAB. Word. Thank you, Joseph, my man. I keep my post-it notes handy, y'all. Gotta keep the post-it notes and the erasable pens. You don't know about these Pilot friction erasable pens? My wife put me on these. Y'all need to get these. Anyway, questions. Any questions y'all got, or any aha moments? Does anybody want to share any light bulb? Like, wow, I didn't know that, or anything they learned today? Jen, you know about the pens? That's what I'm talking about. They click, they got a nice click, and you could just erase stuff. Look at this. You just erase. It's a pen. I love it. Multiple colors too. Let me not erase this information. All right. I mean, I don't think the folks got any questions. I feel like, let me go back to this so y'all can book a call with me. The call is complimentary, y'all. I'm not charging you to talk to you. If we end up doing business together, we'll have that conversation then. But I don't even know if you my vibe, if you can vibe with me as a financial advisor. I'm picky with my clients. I love what I do though, so you have to be. I don't just work with anybody. So, but I would love to talk to you if you are looking for a financial advisor or someone to help you with your financial house, or someone to talk to about this ETA thing and see how it fits into your financial house. My website is chikeuzoka.com. I should put it in the chat, shouldn't I? Yep, chikeuzoka.com. Matter of fact, I'm putting all my links in the chat, y'all.
I have a question.
Yes.
Hi, this is Arthur Reese. My question is about when you were talking about doing your due diligence, and I wanted to find out if you had any tips on conducting that type of search.
Yes. So the due diligence you have to do is, and let me pull up this list. Actually, I'm literally going to pull up a list that I just sent the broker, so that you can understand what we talk about when we talk about due diligence. May 25th. So financial statements and reports, right? So profit and loss statements for like the last 3 to 5 years, balance sheets for the last 3 to 5 years, cash flow statements for the last 3 to 5 years, tax returns, current year-to-date financials. If you need me to send you this list, just like I'll give you my number too, actually. 732-778-2538. My phone number is 732-778-2538. My phone number is in the chat. All right. So, bank statements, accounts receivable aging report, accounts payable aging report, a breakdown of revenue by products and services and customer segments. The next section says sales and revenue analysis. So sales reports and trends, customer contracts and agreements, subscription and membership reports, if applicable. Another way to finance a deal is asset-based lending. Let's say the company you're buying owns $10 million worth of inventory that they have on hand. An asset-based lender will appraise that $10 million inventory and give you a line of credit or a loan for half of that, no more than 70%. Just expect half, 50% of inventory, machinery, equipment. You can get a loan from an asset-based lender that is going to lend you strictly on the inventory, machinery, and equipment without your personal stuff being needed, right? Because they're looking at the physical stuff. If you don't pay the loan or the line of credit back, they're going to take the inventory, machinery, or equipment from you. Top 10 to 20 customer and revenue contribution. Another thing I learned is if any customer is more than 10% revenue of a business, that's a problem. That's a red flag. All right. Next section, expense and cost analysis. List of fixed and variable costs, payroll and employee expenses, rent, lease, employment contracts and mortgage agreements, utilities, insurance, and other overheads, marketing and advertising expenses. The next section, debt and liabilities, loan agreements and debt schedules, lines of credit and credit card statements, tax liabilities and compliance records, litigation or pending claims. The next section, operational and asset valuation, inventory reports and valuation, equipment and asset depreciation schedule, and business licenses and permits. That might be an exhaustive list, but that's my list. There could be stuff missing from this list, but let me know if y'all need this list. Send me a text message. My number's in the chat. And I will send you that list because it's pretty extensive, but it's super helpful. I hope that answered the question. I know that was like a long answer.
Yes, you answered my question. Thank you so much. I did have a follow-up question. Are there
Yes.
criteria that the buyer needs to meet in order to buy the business?
What do you say? What do you mean? You as the buyer?
Yeah, like, do we have to have any sort of paperwork in place or that sort of thing in order to buy
So,
the business?
well, I mean, think about it, right? You're transferring an asset. So that asset, that business that you're buying is probably under an LLC or S corp or C corp. That seller is probably going to dissolve that entity once you take over. So what does that mean? You need to have your LLC, S corp or C corp set up because on closing day, those assets of the business are going to be transferred from one entity to another. So you have to have your entity, whatever entity is best for you based on your situation that you've spoken to a tax professional about. That's the day that you will need to have that stuff set up because the utilities and all these subscriptions that the business has and the clients, they all got to pay or get paid by an entity. So you got to have that stuff set up. Does that make sense?
Yes.
Yeah. And so we're looking at a business right now where the buyer would need to have a GC license. So some businesses you may need to have a CPA to buy a accounting firm. You may need to have a GC license to buy a real estate business. You might need a property management certification to buy a property management business. You might need a license to sell baked goods if you're buying a certain food business, right? So there are, based on the business, there are certain things you will need outside of having the entity set up to be able to take on the business assets.
Gotcha. Thank you.
Yep, yep. Was that helpful, y'all? Oh, I have a question. You have a question? Minimum amount needed to get started? What do you mean minimum amount needed to get started? For what? What do you mean? Somebody asked minimum amount needed to
Yeah,
get
I
started.
did. This is Larisha. How are you?
Oh, yeah,
So
yeah,
I
yeah.
was late to hop on the call, but
Okay.
I just wondered, as far as reserves, and I guess you kind of answered it in the last question, but even with what you've seen out here, are businesses going for 100,000? Are they going for 150? Are they going for 2 million? Like, what? How would
Yes.
you prepare yourself financially to be able to purchase?
So yes, businesses are selling for all those amounts and less than 100,000 and more than 10 million, right? So there's everything out there, right? That's why there's so many. You should, I believe, understand the different types of financing options: sale leaseback, seller financing, SBA loan, private investors, raising capital. Like once you understand those options that you have, there is some prep work you could do, put like speaking to an SBA 504 green lender to understand what their requirements are, so that if you find a business that is SBA, not every business is SBA qualified. If you find a business that is SBA qualified, you already know, because you spoke to the lender who's going to guarantee that SBA loan, you know what their requirements are, so that if you find a business like that, you understand the process and you can prepare yourself, right? Let's say you are doing a sale leaseback and your goal is to sell the real estate, take the money, and buy the business with it. You may need to know, what are these sale leaseback buyers who are going to buy the building, what are they looking for, and what price would they pay for it, so that if you come across a business that has a piece of real estate that you already know somebody's looking for, it makes it easier to kind of, in essence, wholesale that real estate for one price, sell it for more, give the seller of the business the money, and you may even have some extra money left over from that, what they call arbitrage. If you buy the business from the seller for $1 million and you sell it for 1.5, that's $500,000 of arbitrage. You could use that arbitrage as working capital for the business, right? So once you understand your options in financing, when you come across the businesses that meet your deal box, you can then figure out how to, when you find the businesses that meet your deal box and you talk to the seller, you got to talk to the seller of the business, y'all, because maybe the number ain't really the number. Maybe they're more concerned about the legacy of the business and who's taking it over than the price they put online. So once you have the conversation with the seller, you'll be able to really understand what their true motivation is. I just want to go be a grandparent. My wife just wants to go to Florida. Like we've done this for 30, 40 years, 20, whatever years, and we just want out. Business is good, we just don't want to do it. Once you understand the motivation, then you can say, hey, maybe I don't need as much seller financing. Maybe I don't need as much of an SBA loan. Maybe I don't need to sell the real estate. Maybe I can buy the real estate and the business and own both. So it's that process, right, of knowing your financing options, conversing with the seller, and then saying, this is the best deal that we could put together based on those conversations. Does that make sense?
It does. Thank you.
Yes. All right, y'all. I'm talking way too much. I got to stop. Brother Brian, you good? Are you with us, Brian?
Yeah, I'm here. Excuse me, I'm here.
Yeah, let me I gotta make you co-host. So you go ahead. Thank you, y'all. I'm gonna make Brian co-host. And so you can share, brother. Go ahead.
Oh, okay, got it. How much time do I have?
You got 21 minutes, brother. And we can go over because people stay. People been staying. So you can go
that's
over.
nice.
Yeah.
Okay, that's nice. Okay, cool. So let me do this. So before I start sharing, because there were some great questions that was asked. I will to the last person's question. If you're going the SBA route, you need to be, and you're looking for an SBA loan, you're going to at least need to be looking at putting 10% down. If you're looking at bank conventional financing, you're going to look at 20% typically. One of the things that I would also just encourage everybody as well too, just from my own experience with other businesses, is to make sure that before you buy the business, you do a lot of search about them on Google and the search engines, because you want to make sure that you're buying a business that, of course, you're going to need advertising and marketing dollars, but you also need to make sure that that you're also going to need to make sure that you may have to change the reputation or the reputation of the business by acknowledging a new owner. And I run into many people who forget about that piece when they're actually buying businesses from sellers, is that, and don't get complacent on assuming that those people, if you're buying a business, that their client base is going to stay with you as well. You just may plan for 20, 25% of those people leaving, no matter what no matter what. So you want to also just think about those things as well when you're putting together your plan as far as money. So I just want to throw that out there to everybody. My thing is I'm just going to talk about access to capital because, and hopefully, please let me know if you can see the screen. And I'm just going to go through it. My voice is out of commission, pretty much. So we're gonna make it happen. And I appreciate everybody. And I'm saying this from a standpoint of a lending standpoint. So let me know in the chat if you can see my screen.
Yes, we got you.
Okay, wonderful. Yay. When you go to a lender, and when I'm saying a lender, I currently work for Accion Opportunity Fund as a CDFI. Currently our loans go up to 250,000. So in essence, you could come to us to get a loan. And what does the CDFI stand for? A Community Development Financial Institution. So typically CDFIs will put in place to be the in between typically between the step I should say before going to the bank and getting financing, meaning that your business is not yet lendable to a bank standpoint, but it's still lendable. There are probably in the United States there's over 12,000 CDFIs, and a lot of them do things a lot differently. So I would encourage you, whether it's an Accion Opportunity Fund, which is nationwide. You'll also might hear of ACE, which is Access to Capital for Entrepreneurs. You'll hear about True Fund, for example. You'll hear about Lift Fund. Those are some of those in the CDFI space that I run into quite a bit. Lendistry is another one. And each one of them have their own, I'm going to say, risk tolerance of what they want as far as a client from a lending standpoint. And of course, when you get to a bank standpoint, that's a different type of classification. But the biggest thing that I wanted to share with everybody is a couple of things that any lender is going to look at. And I have a presentation. I'm going to go all the way around it because I want to get to the highlights of it. And then I'm more than happy to, is this thing going to change? Yes. I'm more than happy to talk to anybody offline. And if those of you who've seen this presentation before, if you've been at some of my other events, just play along with me today. One of the first things that you want to find out is how much capital do you need? And you want to find out, of course, if you're buying the business, how much it's going to take to buy the business. But also you need to think about those permits, those licensing. You need to think about advertising and marketing. What is going to be your all-in-all cost in getting and buying a business? Because one of the biggest challenges that I see is a lot of businesses, especially our Black and brown businesses, we are underfunded, we are undercapitalized because a lot of times we'll know we need $1 million, for example, and we're asking for 500,000 because we're like, oh, well, I don't think I need this, I don't think I'm gonna qualify for this $1 million. And instead, what you need to be asking for is probably $1.5 million, because you got to account for inflation. You have to account for, like today's dollars is, today's money is better than tomorrow's money because you lose value every day typically. So sometimes it's best to overstate than understate, because what else that I see a lot of times is people, they understate, and again, knowing that they needed $1 million and got 500,000, and now they go into another lender asking for the additional 500,000, or even asking even more because they did not plan. So I want everybody to definitely think of that. So, and even if you think the expense is menial, you want to add that down because it all adds up. The biggest thing, though, I wanted to also talk about too, and there's some slides that talks about how much do you need and why. The biggest thing when you go to any lender is let's talk about personal guarantor. So anytime when you're a personal guarantor, and trust me, I know what TikTok University and YouTube High School and Instagram master's degree program is going to say is that, oh, well, I can get this loan in my business credit. Well, when you are a personal guarantor, that means that you are responsible and the lender is going to look at you as part of the debt. Now, another thing too, I'm going to add to that. As a personal guarantor, if you're in a business that has more than one owner, especially if they own more than 20% of the ownership, that means that person is also going to be on the loan as well. So what does that mean? That means that everybody that owns a piece of that business needs to have strong credit. What does strong credit look like? What does a score look like? So let's talk about that for a second. When we look at personal credit, does everybody know that on each of your bureaus, Equifax, Experian, and TransUnion, that you have multiple scoring versions? Does everybody know that? Oh, presentation mode. Let me go there. Hold on. I see that question. Okay, let me get y'all off the screen. And okay, my presentation went away. Let me do this and go back. Hold on, y'all. Okay, where? Okay. Well, I'm going to talk about it still. If you're not aware, one of the things I always suggest to people is if you go to my FICO and subscribe to FICO, FICO will give you all of your scoring methodologies and scoring versions. And the reason why you want to know this is because a lender can be pulling up a different version of the credit report than typically what you're seeing on okay, there we go. Typically, what you're seeing that you normally see. For example, typically on your personal credit report, they're divided into three categories. You have bank card or credit card, you have auto loan, and then you have mortgage. Typically, your mortgage scoring methodology is your more conservative scoring methodology. So what means is that you could have different, all of us have different scorings under those categories. And it's important to know that because when a lender is telling you, oh, your minimum credit score need to be 680, it might be 680 based on the mortgage score, or like Equifax, that's Beacon 5. Okay. Or if it's Experian, for example, that's mortgage, that's 2 or 2.0. So you need to know that. So that's why you need to know all your scores. Because I've come from banking, I've seen people get declined that way when they thought they had a specific score and didn't. So I encourage everybody to get all of your scoring methodologies because you need to know where you stand. And if you have other people in your business, at least, especially if they own more than 20%, you all need to be having that conversation at all times. But even above the score, another thing that people have to look at is you have to look at what's being reported within. Is not only the information accurate and incorrect, such as each trade line, each account, but especially, and they're going back last 7 years, everybody. In the last 7 years, is your information being reported correctly about how you pay? And if you have some bumps in the road, are you able to explain that? If you had some late payments or some past dues that reported, that was correct, okay? Are you able to explain that? Another thing that you want to they're paying a huge attention to is the revolving debt portion, or what we call utilization. So if you're over, so typically I tell people try to be under 10% utilization at all times. However, typically when you start getting past 30%, 40%, lenders are looking at your personal credit, is that you're running into some pending challenges. So keep that in mind. Now, I'm gonna skip around a little bit. So another thing you got to pay attention to are the rates, because that's going to be important, and the cost of borrowing money. So for example, here at Accion Opportunity Fund, our current rates, for example, are anywhere from 8.5 to 27.99. And a lot of that is based on the industry, that's based on the personal credit, that's based on a lot of times years in business. There's a lot of different factors that a lender can truly look at. So when you're looking at the rate, you want to look at the rate, but also you want to look at the APR. So I can quote you a rate of 4%, but if my APR is 12, for example, that additional 8%, which has to be disclosed to you because that's part of truth in lending, is where all of your fees, all of your extra costs are coming into play. And that's the things that you're going to need to ask for. So you're going to ask if there's an application fee. You want to ask if there's an origination fee. You want to ask if there's closing costs. You want to think about if I'm going to have to put up some type of collateral. Typically, sometimes if you're a homeowner, some of these lenders are going to want you to put up your home. So you need to ask these questions. Again, I talked about personal guarantee and what that means. Okay, and it also means that if the debt goes bad, they're looking at you to pay it as well. And then also with the loan, if there are any prepayment penalties. So you want to ask all of these questions as well. Another thing, I'm going to skip this because this goes into some typical percentage rates and things of that nature. So I'm skipping this because I really want to talk about I really want to make sure we talk about the credit and what a lender is going to truly look at from a lender's perspective, because at the end of the day, it's all about managing risk. And when someone looks at your tax returns, when they look at your bank statements, which I'm going to go there in a second, when they look at all of the things that you submit to them, how do you look on paper? Okay, do you look risky on paper or do you not look risky on paper? That's what it looks. That's what the lender is really looking at, because they want to know if you're going to be able to pay this money back. That's an essence, because they try not to give any. They don't want to give out loans that they know that you're not going to pay back, because unfortunately, too many bad loans will makes these lenders go out of business. Okay, so I want you to be thinking about that as you're gathering your documents and documentation. These are the 5 C's, and typically there are 6 C's of credit. They look at the conditions, they look at your character, the capacity, the capital, and the collateral. So when a lender or an underwriter is looking at this, they're looking at all of this from that perspective. They're looking at past things. Like, for example, do you all know that there's reports out there via LexisNexis that will show if you had past bankruptcies 20 years ago? Do you all know that there's reports out there that lenders can subscribe to, that you was arrested 20 years ago, they can find that information out? That's why it's very important to make sure that when you're filling out an application, you read the application. And if you don't understand it, please ask questions at the moment. Okay, because lenders can pull up that information. And I've seen people be declined for loans because of past information that they weren't aware of or did not think of when it was time to apply for the loan. So typically, I know Chike went over into this, but I just want to iterate this. Typically, lenders are going to want to see the last 3 years of tax returns, both business and personal. They're going to see interim statements, financial statements. They want to see the existing debt schedule. So any debts that you got currently going on in the business, they're going to want to see that and know what those are. Of course, we talked about personal credit. They're going to look at a personal financial statement because they want to see your assets and your liabilities and see how much do you truly own. And again, do you have more assets and liabilities? Those are things that they're going to be looking for. And then they're going to be looking at information about what you need. All right, I'm going to skip this because we talked about that. And I talked about, again, personal credit. Now, one of the biggest things that and DK talked about that, so I'm going to skip that. But the biggest thing I wanted to go over is tax returns, and I'm going to talk about bank statements, and then I ask the questions at the end if we got time. This is a 1120 tax return. So one of the biggest things that business owners don't understand that I run into a lot is, well, Brian, I made $900,000 last year, but then I still got declined for the loan. Well, a lot of times the reason why people are getting declined for the loan is because from an underwriter's perspective or a lender's perspective, we are looking at, in this case, line 21, we're looking at your net profit, okay? I want to make sure people understand that. We're looking at your net profit. Does your annual revenues count? Yes, they do. But from a ability to pay the loan back, we're looking at the net profit, okay? Now, there are things that can be added back in so the lender can look at total cash flow. So you got the net profit, you have depreciation, which is listed, you have amortization, and you have interest. So those are typically the lines that a lender is really going to pay close attention to when they're looking at your cash flow. Okay, so again, like I tell people, when you write off everybody, including your mother, and you don't have enough net profit, you look on paper like you don't have any money. Okay, so keep that in mind. Another thing that I also want people to know about this as well is that, and I'll talk about a little bit more on the bank statements, but I'll share a little bit now, is that also lenders are looking at a lot of times, debt coverage ratio. And what does that mean? Okay, global means is they're looking at your personal income, they're factoring in your personal income as far as the cash flow, but they're also factoring in your personal debts. What I've run into, unfortunately, is people who have been declined for loans because they look good on the business side, but they got too much personal debt going on. That when that personal debt is factored into the loan or to the potential lending process, it pulls the ratio of what a business owner can qualify for out of whack. Because typically, on average, lenders are looking at anywhere from a 1.25 to a 1.30, what we call debt service coverage ratio. What does that mean? That means that your cash flow, which is your numerator, divided by your debts plus the proposed new payment, needs to all add up to be at least 1.25 or 1.3. So going back to old school math, your numerator needs to be greater than your denominator. So your cash flow needs to be greater than the debts that you have. Okay. So on this example, you'll see that we have that from the tax return. The total cash flow is $20,844. It was given by profit before taxes. What was that figure? Then the depreciation, the amortization, and then the interest. That gives you the total cash flow. Now, sometimes when those lenders are looking at 2 and 3 years, guess what? They're looking at that as well. They're calculating that for each year and they're averaging that as well. So keep that in mind too. So again, some people have a great 2023 or they had a bad 2023, but then their 2024 was good. Guess what happened? They're going to average that. So you keep that in mind as well. But that's dependent on the lender. Some lenders don't, but most do. Okay, now let's talk about bank statements. So this is another area where people, unfortunately, miss the mark. So bank statements tells the lender what's going on in real time. You really want your bank statements to show your revenue. So a lot of times, and some people don't know this, but sometimes those Zelle transfers, those cash apps, they're not counted toward your revenue a lot of times. And especially if they've seen it come from another source, they're definitely not going to count that. Okay, so you want to make sure that your revenue for your business is all going into the account. Another thing that some people will tell you is, well, I have everything being paid out of my business account. Well, if you have personal stuff being paid out of your business account, the underwriters or the lenders can count that as your debt as well, which may have not been reported elsewhere. So you could be showing more debt than you really on your bank statements than really your reports show, but now the lender's going to calculate that. Now I see we getting close to 12, and I see my chat box is going crazy. So let me see what I'm seeing. So yes, I did put the presentation in bigger mode. Thank you. Let me see okay, those are just cheers. So again, the biggest thing that I see according to bank statements, and this is kind of and I'm just going to give you my suggestion. I usually suggest people to have at least 2 business accounts, 3, because the third need to be a savings account. That's another conversation for your business. Just like you need to have a personal savings and have a year's worth of income saved up for personal wise, you need to have the same for the business as well, because you never know what may happen out here in these streets. But I at least tell business owners to have at least 2 business accounts. One, and again, I'm anal retentive, y'all, so think about that. One where all of your deposits come into, and then a separate account where all of your payments or debits come out of. Okay. One, it makes it easier for your lender to see all of the see your actual revenue, and then 2, it also makes it easy for your lender if they want to see your debts as well. It's easy for them to see that as well. So that's what I always suggest people to do, but it's left up to you. I just like clean. I just like looking at stuff clean. That's just me.
Brian, can you repeat that, please? What you just said to do? Can you please repeat that again?
Sure. So I suggest people have, in essence, 3 bank accounts. One, have a savings account for your business, just like personal. Just have 12 months of your expenses saved up and building toward that and at all times, so you can you never know what may happen. That can also be a savings to help build you toward your goals or your future. But the biggest thing is from a checking account standpoint, I always have people, I'd recommend have one account for all of your deposits to come in, and then a separate account to have all of your payments or your debits come out of. The other reason why I suggest that too is because we have a lovely word that goes out here in these streets called fraud. And when people get your bank account information, they got it. And it's a hassle. Yes, trust me, I know, I've been there. It's a hassle to change your bank accounts because that person has your routing number and account number. And there's a lot of fraud that goes on out here in these streets. So the more that you can have stuff separated, the better you are, And it's actually cleaner from a balance sheet standpoint for the lender to see all of your your cash flow and what's coming in, when you can present them just the bank statements with all your revenue coming in. And sometimes let that and let the lender ask for the debits.
And
It's
so
just easier that way.
every month you have to transfer one account
So
to
it
the other?
depends. So what I would suggest people do is, like, and this is the beauty of online banking, is you have, let's say you have 300,000 coming in, and then as debits come out, then transfer daily the amount that needs to go in a separate account, or every day, or every once a week, or just transfer it so that that the payments can be paid.
Got it. I never heard about that. Thank you for sharing that. That
Oh
was
yeah.
deep.
Oh yeah. Yeah, Joseph raised his hand, so I'm gonna let him talk for a second. My voice is about to give out, y'all. Go ahead, Joseph,
Hey,
if he's
Brian.
able to speak.
Hey,
Hey.
great presentations. So TK mentioned earlier about SDE, or seller discretionary earnings. And you had a couple of screens back where you showed the tax return, and a lot of times they don't align up, right?
Correct.
Are
hmm
you seeing where underwriters will recast those cash flows to capture maybe some things that shouldn't be there to add to that bottom line, right? For example,
hmm
my son is home for the summer. Like, Dad, I need to work. Yeah, I'm gonna put you to work, and I'm gonna put you on payroll, or maybe I'm just paying him because he's in college. Have him like as compensation, but he's really not adding value to the company. It's just a way for me to pay him, right?
hmm
But that's also decreasing my net earnings. That even
Right. hmm
sometimes you got
So
to set that up, right?
yes, and it depends on and I'll be honest with you, it depends on the risk tolerance of the lender. I've seen some lenders and do that what you just said, and then I've seen some lenders just say nope. So it depends on that lender's risk tolerance, actually.
Absolutely. Thank you.
Oh no, great question. And that's, I don't want to plug anything, but I'm gonna plug this. That's why before getting a loan, everybody, I would encourage you to speak to a lender, the Chikes of the world, and have a good conversation with the lender. If you have a good banking relationship with a banker that knows what they're doing, a banker, a Joseph, these people who truly are in the lending space, I suggest to have a conversation with those people first, because by having a simple conversation, you can learn a lot, and you can learn if you're ready or not just by having a conversation, and knowing what you need to know before going further. Let me see what else
Yeah.
I got going
Yeah.
on here. I see we have time.
I just wanted to add, Brian, if you have a screen with your info, could you put that up? I just wanted to add one
Yeah,
thing
so
that
it should be at
so
the end.
for those listening, I have found that between the numbers you see online
Yeah.
when you find the business on Transworld, BizBuySell, BizQuest, Gab, LoopNet, between the numbers you see there and the numbers that show up on a profit and loss statement and the numbers that show up on the tax returns are not always the same numbers. So that's
Right.
where the deal box matters when you see it online and when you get the information. But really, the tax returns are really going to show like what's going on with the business. So I just shared
Right.
that because I'm glad you brought up that tax return to show like, yeah, you brought revenue in, but you had too many deductions and you net profited $5,000. Nobody's going to lend on that.
Yes.
So
And
yeah, that mhm.
yeah, we can have a whole 2-day
Yeah,
conversation around this,
yeah.
because the biggest thing I want people to understand is everything from their tax return, yes, revenues, and of course, I hear people, oh, the bank didn't give me a loan, but they see the 300,000 coming in the account. Well, let me tell y'all, people, if they see 300,000 coming in, but they see 299,000 coming out, you look like you ain't got no money. I want y'all to understand that.
Mm-hmm.
And I know that's
Yeah.
a different concept for people to understand, but from an underwriting and a lender standpoint, that's what they're looking at. You don't have any money. And trust me, I get bank statements all the time. People needing
Right.
needing money, and I look at the end of the month bank statement, and it's $1,000, it's $1,500, and to a lender, no, it's not gonna. I'm telling you all, it's not gonna happen. And let's have a 2.0 real quick. Not only should your bank account at the end of the month. I give an example. Let's say your loan amount is 5,000. Typically, lenders want to see 3 to 4 times that amount as an ending balance on your bank statement at the end of the month. So yeah, so these are the little things that people sometimes don't tell everybody, and I want to make sure that we tell you, because these are the little things that I'm just gonna keep it 100 with this code. These are sometimes the little things that keep Black and brown businesses not getting the money.
Yeah, we got to know this stuff, y'all, and that's why we talk in the terms that the business acquisition world is going to need you to know, right? Like SDE and those type of things.
Yes.
And
Chike,
so,
can I? Oh, I'm sorry.
Yeah, go ahead.
I was just going to say one other thing too. For those of you on this call who are lenders who have SBA, I was on the call about 3 weeks ago where Kelly Loeffler was on. SBA, and I wish y'all could see my eyes, but y'all can't. SBA has just updated their SOP, everybody. And they're making it a little bit more tougher to get loans, especially under that SBA 7A. So I want everybody to understand that. So please make sure that you're talking with a loan officer, because let me give you a preview of what I'm saying about this. Is that according to the new SOP that goes in effect June 1st, they're not going to refinance debt that was merchant cash advance or factoring loan. And unfortunately, a lot of our people, those are the type of loans, because we don't understand or we need things quick. Those are a lot of times we get those merchant cash advance loans or those factoring loans because for whatever reason. And SBA, and I was on the call, and literally this is what SBA said. The reason why they're not doing that is because those loans are considered one step away from you filing bankruptcy.
Yeah. I want to address one more thing that Brother Gray, Charles, thank you for joining us. So when I was talking about a CFO, Chief Financial Officer, Arnisha is more of a fractional CFO. Like you can hire someone like her to analyze the business financials, right? I'm a financial advisor, and I'm not I don't look at balance sheets and profit and loss statements and net cash, those things on the daily. I look at financial plans. So yes, you need a financial advisor in this process, in life in general. You also need someone like, to Charles' point, a CPA with acquisition, is familiar with acquisitions, or the CFO, fractional CFO. So a CPA tax advisor could also be the one analyzing the business financials and the tax returns and the bank statements. So quick story, we were going to buy a business. Online, it said they were selling for $110,000 and had $48,000 of SDE net profit. So in my mind, first thought, no way can I put in 110 and get 50 every year. That's got to be too no. When we get the actual tax returns, the business, so $48,000 is like about $4,000 a month. So I'm gonna tell you how the business financials for the last 3 years. 2022, the business profited $10,000 total for the year. 2023, the business profited $4,000 for the year. 2024, the business lost $3,400. So, in my mind, I ain't the smartest one in the world, but it's trending like you're about to lose $6,000 or $7,000 in 2025, meaning you'll be negative $10,000. That number that we got after doing our due diligence was not the number we saw online. If I would have seen that they lost $3,400 last year, why would I even have this conversation? So you got to do your due diligence, y'all. The research is important. The research on funding options, the research on the businesses, the research on what businesses you can add value to and are going to make you Stick to your purpose, whether it's lifestyle, leverage, legacy, right? And yeah, so Brian's information's in the chat. I will put my email in the chat as well as my phone number.
Hey,
And
Chike.
y'all, yes, go ahead.
I know some people in the chat asked about to send the presentation. Is there a place where I can send mine?
Yeah, just email it to me.
I will. All right, thank
If
you.
you have it in a, if you have it in a drive, it'd be easier.
Okay.
And the link, send me the drive link. All right, y'all. We know this is 11 minutes over our time. Listen, y'all, I told you it's Money May. So Saturday, the 24th, you see on my background, the Money team has partnered with the Education and Workforce Development Committee and the Young Entrepreneurs Collaborative for our 2025 Money Smart Business Summit, Building a Rock Solid Business. We got people talking, we have chamber members and chairs talking about entrepreneurship through acquisition, talking about business technology, business structures, setting you up for success, the CEO mindset, hiring the right talent, right? Funding and lending opportunities. Joseph and Brian will be there. So show up. We have 7 vendor spots available for the 2025 Money Smart Business Summit on Saturday, May 24th from 11 to 3 p.m. at McPhail Studios in Norcross. And if you're not familiar with McPhail Studios, you need to get familiar. You need to show up on Saturday, May 24th, because that is a Black-owned member, ABC member spot for your events. We appreciate you all for joining. I'm going to screenshot this, Jen, so I have your email. Got you on that. Last thing, any last thoughts or concerns? We appreciate y'all so much for being with us today. We hope you enjoy the rest of your wonderful Wednesday, the rest of your wonderful week. And with that, we are done, y'all.
Thank
yes,
you.
Everyone, if you registered, you should be getting a copy of this thing tomorrow. Give us a day to just make sure it's pretty and all that. How do you sign up for the summit? Oh, that's my fault. Hey, y'all, I'm putting the link to the summit right now in the chat because I should have done that when I said it. Thank you for checking me. That is the link to the summit, y'all, in the chat, and you can click that link and you can sign up for you could register to show up, and we have vendor spots available. We have 10 total, and I think 3 have been spoken for. So we got about 7 vendor spots available. It's gonna be dope. It's gonna be morning breakout sessions. We're gonna have an afternoon lunch and panel discussion, and then we're gonna have afternoon breakout sessions, giveaways, and thank yous and shout outs to the vendors and the workshop presenters. And so we're excited about the 2025 Money Smart Business Summit. Yes, that's going to be dope. You got to show up for that. Show up. Thank you. Thank you, everyone. We appreciate y'all. We're glad this information was helpful. People can see my face. Jen, I love where's Jen? Jen, we can see your face if you turn your camera on. But we appreciate you, Jen, for joining from Pennsylvania. You probably are hey, Jen, you are probably the farthest person from Atlanta that's showing up today. So we appreciate you for showing up. We thank you for adding value to. And, Brian and I are here. We are part of the Money team, the Financial Services Committee, and our goal is to really help the individuals and business owners of our chamber and our community with everything financial, from bookkeeping and tax returns to insurance and employee benefits to investing to estate planning to business structures. We have CPAs and we got everything on the Money team. So you know what? If you go on frontier.com, I'm sure you can find a quick flight to Atlanta for May 24th, Jen. I think you need to be there. I think you should be in the room. I'm just saying. God told me to tell you. All right. I appreciate you all. Y'all was like, he said he was going to stop talking 20 minutes ago. We're still on. So does anybody have any questions, thoughts, anything anybody want to share?
Sure.
going once?
I just wanted to say one
Yeah.
last thing to everybody.
Yes.
And we have some amazing ones within the Atlanta Black Chambers, but please make sure, you'll get my side of the presentation today. Please make sure that every year you're having a conversation with your CPAs, and make sure that if the CPA isn't asking you, you're telling the CPA that you need the tax return to work for you from a lending standpoint. Blink, blink,
Mm-hmm.
blink.
Mm-hmm.
Because sometimes the CPAs will not know unless you tell them, and you have to look at lending as a 2 to 3 year game as well, people. So that was just my final thoughts.
Yeah. Yeah. Um, yeah, we're gonna do this again in the workshop we're gonna do on the 24th. We're gonna share a little bit more about deal structure and structuring deals when you're talking to sellers, and making sure that the seller gets what they want, but also you get what you want, right? And that's the key to this thing. So thank you. Thank you all. We will see y'all on Saturday, May 24th at McPhail Studios in Norcross for our 2025 Money Smart Business Summit. Man, we excited. That's gonna be dope. And so again, I am your Financial Services Committee, aka the Money Team Chair, Chike Uzoka. I am a speaker and financial planner, and you can find out more about me at www.chikeuzoka.com. Woo! Y'all have a good one.
Yeah, the Capricorns rock today.
Let's go, Capricorns. Let's go.